we are counting down to more earnings coming through today. Two large PSU banks, SBI and Bank of Baroda, are going to come out with their earnings. We have banking expert Hemindra Hazari joining us now. Hemindra, thanks so much for being with us at NDTV Profit. So far, banking earnings have been a mixed bag. What are your expectations from SBI, the biggest PSU lender?
So if you look at SBI, I think you should see a decent set of numbers. Because one is that the base of the Q3 of last year, this is true of nearly all the PSU banks, was impacted, I think, because of the asset quality review. So therefore, the numbers on a year-on-year basis would be quite positive. So both in Bank of Baroda's case, which has been having a series of setbacks earlier, and the market has always been expecting a turnaround in Bank of Baroda. So I think we have to wait and see whether this quarter they will meet those expectations that the market has been able to turn around. So when we look at, I think, the numbers, one has to very clearly see about the net interest income growth, because that is the core growth that the banks would show, as well as the bad debt provisioning and the slippages on a quarter-on-quarter basis. Now, some banks have been showing rather constant slippages compared to Q2. So we have to wait and see whether Bank of Baroda and State Bank of India can also show such results. Because mind you, Q3, in my opinion, should have been adversely impacted by the demonetisation, especially for the small and medium enterprises, which have got very badly impacted. But so far that the numbers that we've seen from other banks, we are not seeing this. And therefore, I'm rather apprehensive that the impact of that may come in probably Q4 and the first quarter of the new financial year.
Right, but we've heard commentary from the management of, say, PNB that said that, we really didn't transact much business. So loan growth is going to be low. So when you have low loan growth, your NPAs are not getting better, your margins get squeezed. So in that terms, don't you think there could be some pressure on margins for SBI and Bank of Baroda? And, the other income may be high, but that may be transitory. So what do you think the margin picture would be like?
See, the margin is going to be under pressure because, one, in a downward interest rate cycle, the margins of the banking industry always tend to get compressed. And that's why banks are extremely reluctant to reduce rates further. I think that's what the indication that the banks said also post the credit policy announcement. Because today they are desperate to show profits and to get profits from any means. And therefore, a reduction in interest rates would actually squeeze their profits in the medium term. And that's why they would be very reluctant to reduce interest rates. So the margin, in my view, should come under some pressure because of the NPA problem, which I do not believe is getting resolved. And I think because of demonetisation, it's going to get worse. And mind you, banks typically have been aggressively growing their retail credit. And I've been cautioning everybody that they are growing retail at a time of a general economic slowdown. And the future NPAs are going to come from this retail sector.
Right, but most analysts come and say, we like banks that have a large retail franchise. Where do you think this risk is coming from? Because the expectation is that consumption growth will continue. When growth comes back, even income should improve. Are there real risk of large NPAs from the retail segment?
Oh, most definitely. You're going to see this loan against property. It is going to blow up in the banking industry sooner or later. It's just a matter of time. Because loan against property is taken for any purpose. Just the property is the collateral. And typically what we find is when you have a slowdown mode, the kind of value of the collateral can be very high at the time of sanction and disbursement. But when you come for the time of recovery, the value of the security and the collateral tends to collapse. So this is a significant risk in my view to the banking sector, and it is not being really appreciated by people in the media or by banking analysts or the banks themselves. Because mind you, we've been going through a very acute slowdown mode. If you look at the small industries, the way they are behaving, if you look at how the IT sector has been behaving, a lot of IT people have been laid off. Now, these are your typical retail borrowers. So when there is a slowdown mode, when there is pressure on salaries, it's bound to impact your retail loan portfolio. And sadly, we are seeing hardly any The growth in retail continues to be strong because the banks are trying to outgrow their corporate asset problem by growing retail. And this is being done in a period of an economic slowdown. So there's bound to be an adverse impact on banks. In fact, ideally, a bank should be really consolidating their book and just focusing mainly on recovery. But sadly, that is not what is happening today.
What's the expectation when it comes to the NPA problem for Bank of Baroda? About a year ago, they had taken a huge, they had done a huge cleanup exercise, and the expectation was it gets better from here. But really, we haven't seen marked improvement. When it comes to the NPA issues, what does it take for the cleanup to happen, for it to be durable?
See, we are always hoped, and that's what this new management have been saying since they came into place in Bank of Baroda, that they are cleaning up. But unfortunately, what has been happening is every quarter we see that this cleanup is continuing. Now, normally, when a bank does a cleanup, the hit comes in 1 or 2 quarters. But again, in Bank of Baroda's case, this has been a recurring issue, and therefore, analysts have tended to, lose confidence in the Bank of Baroda. So we have to wait and see whether they show some stability in their slippages, because that's what is being focused on. You see, today the general environment overall is very poor, and therefore one should expect really slippages to be on the rise, because that is the state of the Indian economy. But what we are seeing is that there is really no significant improvement, but stock market prices keep going up because really mainly to do with flows. So the fundamentals really are not justifying the kind of valuations that we see today, because there is really a decoupled, the market has really decoupled, in my view, from the underlying fundamentals. So even if a bank reports little disappointing numbers, or any corporate, we are not seeing that impact on the stock market today because of flows.
Right. Hemindra, as far as SBI, BOB, any of these names are concerned, or what we saw for PNB, a little bit of decline in slippages on a quarter-on-quarter excited the PNB analyst. Do you believe that, still, for SBI, again, if you just look at the estimates, 11,000 crores is what they did in the previous quarter. I'm talking about fresh slippages. Say if it comes at 8,500 crores or 9,000 crores, should you look at it like a 20% discount on a decline on a QOQ basis, or still 9,000 crores is quite a big amount of slippage?
No, very true. But the way the market is today, that if they show a decline in slippages over quarter 2, it will be regarded as a very positive sign. Because mind you, quarter 3 had demonetisation, which should have had a very severe impact on the SME portfolio in particular of banks, as well as on the agrarian portfolio where payments are all done in cash. But as I said earlier, what we are seeing so far in bank results, we are not seeing a very significant deterioration, and analysts are therefore concluding that the impact of demonetisation has been marginal. And here I really beg to differ with the analyst community, because I believe there's going to be significant problem from the small and medium enterprise portfolio on account of demonetisation. Therefore, I would expect that in quarter 4 that you are going to see an increase in bad debts. So one should not really take the indicator in quarter 3 as that there is an improvement in the overall loan portfolio.
Right. As far as the banking results are concerned, in terms of private sector lenders, do you think some of them have continued to see very good traction? So Yes Bank reported good, IndusInd Bank reported good, and that's why the valuation difference would exist?
No, very true. You are seeing IndusInd Bank, you are seeing Yes Bank report decent numbers, even a Kotak Bank. But I would just like to remind you and all your viewers that in quarter 3 of last year, up till quarter 3, even banks like Axis Bank and ICICI Bank were reporting decent numbers. And suddenly we saw a downward spiral in their numbers on account of their, the sudden appearance of very poor quality corporate loans. So the question is, can such a thing happen in the case of an IndusInd Bank? Can it happen in the case of a Yes Bank? Because in the case of a Yes Bank, they are still very much into the corporate lending space. And IndusInd Bank has a very high exposure also to the commercial vehicle industry, which has taken some knock in this demonetisation process. So one just hopes that the numbers that they report are going to be sustainable in the immediate future. And what has happened in the case of Axis and ICICI Bank will not recur for these banks.
Right. As far as NBFCs are concerned, at least they are reporting good numbers.
See, NBFCs to me is a very strange phenomena. They were the darlings of the market prior to demonetisation, and actually demonetisation should have impacted this sector very severely, because the kind of lending they do on their borrowers, they really operate in the cash economy, especially even for that matter for microfinance companies, and therefore they should have been very badly impacted. But again, from the numbers that we are seeing, you're really not seeing that being reflected. So it appears that the NBFCs, the space we're in, were totally not in the the sector which the demonetisation impacted them.
Right. In terms of NBFCs, one of the key things have been that rates have been coming down and cost of funding is going down. Plus, they have been taking a lot of share from PSU, which are suppressed for capital. Do you think that is changing now with rates now hardening, or at least the rates not coming down meaningfully? Some of these valuations may come for a toss?
You see, that is possible. But mind you, in today, it is not the liability side which is, one has to really look at. One really has to really focus on the asset side of any financial intermediary, because that is where the big problem is. And if NBFCs are continuing to report very healthy numbers, then I would like to probe those numbers extremely carefully, because the space that they operate in is directly exposed really to the smaller players, and therefore even if their margin were to go up because of the earlier downward interest rate, to me that's not that significant, because it's the asset side which is causing the main problem in financial intermediation today.
Hemindra, thank you so much for taking out time for us. Always good to get a perspective. Hope to get your view again once SBI and Bank of Baroda declares their numbers.